So you made a bunch of money off Bitcoin this year and you haven't really thought about your taxes. Well, the IRS sent out these guidelines to explain what we need to do when it comes to paying taxes on cryptocurrency. Stay tuned. I'm going to talk about it in this video. Well, what's going on, guys? So there's a lot of confusion about Bitcoin, about virtual currencies, cryptocurrencies, and paying taxes. Obviously, Uncle Sam wants that money. They want to get paid taxes on any type of income. So if you're making money selling crypto kitties, if you're making money selling Bitcoin, whatever you're doing, they want a little bit of that action. So kind of breaking down these guidelines here, the IRS sent these out to, it was on CoinBase, open this up. You can see kind of some of the frequently asked questions, kind of going over this and explaining what the IRS wants us to do when it comes to cryptocurrency gains and Bitcoin, Litecoin, all that virtual money. So first off, right here, it talks about the IRS is aware that the virtual currency may be used to pay for goods, services, or held for an investment. Virtual currency is a digital value that functions as a medium of exchange, a unit account, and sometimes operates like a real currency, the coin and paper money of the United States. So basically right there, the IRS is acknowledging that Bitcoin, virtual currency, is pretty similar to a real currency that they want to quote unquote call being the US dollar or other countries' dollar. So right there, that's interesting because they're now acknowledging, but I think this is actually back from 2014, this notice. You can see they actually made these guidelines back in 2013 and kind of going over some of the questions people ask, how is a virtual currency treated for federal tax purposes? Virtual currency is treated as property. So it's the same idea that if you buy a house and you sell a house, it's that property, or if you buy something, it goes up in value and you sell it, and that's basically what it's classified as. Is virtual currency treated as a currency for purposes of determining whether a transaction, right now it says virtual currency is not treated as a currency that could generate foreign currency gain or loss for federal tax purposes. Must the taxpayer who receives virtual currency as payment for goods or services include in computing gross income the fair market value of the virtual currency? Yes. A taxpayer who receives the virtual currency as a payment for goods or services must include that in their gross income, including the fair market value of the virtual currency. So here's one of the issues that I have with this. So let's say Bobby pays me $100,000 in Bitcoin, right? And when he paid me Bitcoin, it was worth $20,000 a piece. So he gave me $100,000 worth. Let's say gave me 4 coins when it was worth $25,000 a piece. And now Bitcoin's only worth $10,000 a piece. How does that going to work? Does that mean, he's paying me for income, I'm taking the Bitcoin, do I have to pay taxes on what that fair value was when I received it? Or do I have to pay taxes on when I sell the Bitcoin? So let's say I never sell the Bitcoin. Let's say I just keep holding Bitcoin forever. How does that work? That's one confusing part at this point. What is the basis of virtual currency received as payment for goods or services? The basis of virtual currency that a taxpayer receives as payment for goods, right there, virtual currency in US dollars as a date of receipt. So I guess it does mean that if Billy pays me in Bitcoin on the 21st of October and then it drops to 0 the next day, I still owe taxes on the $20,000 or the $100,000 that he paid me the day before, now that Bitcoin's only worth $20. Or you can see, so that's confusing. It's very confusing because if I have $1 million worth of Bitcoin today and then tomorrow the whole thing crashes, the bubble pops, now I owe taxes on the $1 million, or I gotta talk to somebody. But how is the fair market value of virtual currency determined? For U.S. tax purposes, transactions using virtual currency must be reported in U.S. dollars. Therefore, taxpayers will be required to determine the fair market value as the date of payment or receipt. If virtual currency is listed on an exchange rate established by market supply and demand, the fair market value of the virtual currency is determined by converting virtual currency into U.S. dollars. Now, that makes sense. It's easy. Does a taxpayer have gain or loss upon exchange of virtual currency for other property? Yes. If the fair market value of the property received in exchange for virtual currency exceeds the taxpayer's adjusted basis of the virtual currency, the taxpayer has taxable gain. The taxpayer has a loss if the fair market value of the property received is less than adjusted value. Does that mean since Billy gave me $1 million worth of Bitcoin and now it's only worth $100,000, I can report that as a loss? What type of gain or loss does the taxpayer realize on the sale or exchange of virtual currency? The character of the gain or loss generally depends on whether the virtual currency is a capital asset in the hands of the taxpayer. A taxpayer generally realizes capital gain or loss on the sale or exchange of virtual currency that is a capital asset in the hands of the taxpayer. Similar to stocks, bonds, other investment. A taxpayer generally realizes ordinary gain or loss on the sale or exchange of virtual currency that is not a capital asset in the hands of the taxpayer. Does a taxpayer who mines virtual currency realize gross income upon receipt of the virtual currency resulting from those activities? Yes. When a taxpayer successfully mines virtual currency, the fair market value of the virtual currency as of the date of the receipt is included in the gross income. So once again, now I'm mining Bitcoin. So let's say I'm mining Bitcoin. I mine a bunch of Bitcoin. Bitcoin's worth a lot of money at the time that I mine it. Well, then a couple days later, it's worth nothing. Do I have to pay tax? It doesn't make any sense. So I got to pay taxes on a thing that was worth $100,000 yesterday, but now today it's worth nothing. So am I going to go broke just having to pay taxes on all this? Currency is subject to information reporting. A payment made using virtual currency is subject to information reporting to the same extent as any other payment made in property. For example, a person who in the course of a trade or business makes a payment of fixed and determinable income using virtual currency with a value of $600 or more to a U.S. recipient in a taxable year is required to report the payment to the IRS and to the payee. Examples: payments from income, rent, salary, wages, compensation. Okay, so that's pretty similar to if you're getting paid underneath that $600 floor that you normally don't have to report it, but if you get paid over that, you have to pay it. Will a taxpayer be subject to penalties for having treated a virtual currency transaction in a manner that is inconsistent with this notice prior to March 25th, 2014? Taxpayers may be subject to penalties for failure to comply with tax laws. For example, underpayments arbitrarial to virtual currency transactions may be subject to penalties such as accuracy-related penalties under 6662. In addition, failure to timely or correctly report virtual currency transactions when required to do so may be subject to information reporting penalties under section 6721, 6722. Claim your Bitcoin last year that you might be able to get away with it. But if not, they might be coming after you. But it really comes down to how much Bitcoin you have. Like I said, I'm definitely no tax expert. I'm definitely not a tax accountant. I suggest that anybody who's making a ton of money with Bitcoin, anybody who's making a ton of money with cryptocurrencies, you should definitely be using a qualified accountant. Talk to your accountant. Make sure he knows what he's talking about. But definitely, you need to look into this. The IRS is definitely going to be cracking down now that everyone's made a bunch of money off of Bitcoin. Everyone's been very public about how much money they've made. So you make sure you pay your taxes. If you made a bunch of money on Bitcoin, Litecoin, all that stuff, it's time to pay those taxes. And the IRS wants some of that action. They know people are out there making money on cryptocurrencies, and they're ready to make some money off of all that action. So there's a little bit more information from the IRS now. Definitely not answering every question that I have. Like I said, the question that if I buy $1 million worth of Bitcoin today and it's worth zero tomorrow, I guess that's a loss. But now let's say if somebody pays me $1 million worth of Bitcoin today and I hold that Bitcoin for the next couple of days and then it drops in value, do I have to pay taxes on the $1 million that I received today, or do I have to pay taxes on the Bitcoin that I sell in the future for US dollars? So that's a question maybe you can answer for me. Maybe you can answer in the comments below. There it is. IRS coming after us for that cryptocurrency.